Hey everyone, on today's video, I'm going to discuss and break down an acquisition that I just purchased, which is 8 units in Orange County in the city of Placentia. A lot of folks have put in comments in the videos and said, hey look, walk us through some of the numbers, talk to us about why buying this asset, give us your kind of train of thought. So that was the kind of thoughts behind this video. So just gonna walk through it. And I think what's really important, as I've learned through a lot of investors who have acquired properties and built portfolios, cash out refinancing and buying an asset is a great way to grow your portfolio. You can do it tax-free, so that's what I did. I pulled out cash on 3 properties that I have, 2 triplexes and a 4plex, which is 10 units. And I refinanced, I pulled out the cash tax-free. I used that money to then go acquire an 8-unit building in the city of Placentia. So just kind of walk through the deal story and then we'll dive into the numbers. So the deal story is, this was actually a property that I was brokering, this 8-unit, I was brokering for a client. We put it under contract, and in the due diligence process, the buyer said, hey, look, you know what? I need to cancel the transaction. I've got some various reasons going on, nothing deal specific, but I need to cancel. And he said to me, you know what? You should buy this. This would be a good move for you. This is a step up for you. You're typically buying triplexes and 4plexes. This would be a good 8-unit building for you to acquire. And I ended up taking over the asset and a contract and purchasing the asset. The seller was fine with it. The broker was good with it. I closed at the same price. And I asked my client / friend, I said, why do you think this is a good one for me? And he goes, this building doesn't need a whole lot of work. It doesn't need a lot of cash and time and focus. You can still focus on what is most important to you as brokerage, but you can still get in the game and be an investor. And that really hit for me. And I did like the property. It was a fair price and in a good location, so I thought to go with it. But I think as being an owner alongside investors that I work with and represent, it allows me to bring more to the table than just brokerage services. I can bring in advisory services if I'm dealing with some of the same things they're dealing with, arranging financing or inspecting units or renovating properties and what to look out for, sharing vendors or whatever it is. But so that's basically the snapshot. I just closed escrow on this property a couple months ago. So let's dive in. So this is the property here on the screen. This is what was nice about it is this is right on let's pull over the Google map. This is right on a non-apartment street. There's not, as you can zoom in here, this is Melody Lane, 449 Melody Lane. Here's the property here, located next to a nice little park. You've got a quiet little street, non-apartment street. There's a couple plexes, but this little 8-unit building that we acquired was the largest property on the street. And then look all behind it. It's all single family homes. Good little part of Placentia, right off Chapman, and near the freeways, near Anaheim, Fullerton. You've got access to some really good stuff. And then just pulling in on the location here, I'm just gonna drop down. This is the property. This is an older photo from, it looks like 2019, but the ownership has since went in and redid some of the landscaping here, but this is the property. You've got garages all the way in the back, 2-story. Let me pull in some of the photos that I took. So you can see you got 8 garages, you got parking on the street. All the units were in pretty good shape. This is pretty much consistent with what all the units look like, all new cabinets or newer cabinets, tile flooring, vinyl plank in a lot of units. But this was it. And so let's dive into some of the numbers. So this is the purchase price. This is our 1-pager. Back up here so you can see it. This is our standard 1-pager sheet. So you can see the price here was $2.4 million. I was able to obtain a loan of $1,440,000 from First Republic Bank. I was able to get a 4.3% interest only for the first 3 years. It's a 10-year loan. After 3 years, it goes to principal and interest, amortizing debt. But what was nice is I was able to get the debt to match the cap rate right here. Plus, there's a lot of upside in the property. And I don't have to do a whole lot of work to the property. So a lot of those things felt good. It was $300,000 per unit. Is that a great deal? Not really. It's not really, we're used to seeing Maybe in today's market, it's going to be in 5 or 10 years, it's definitely going to look like a good deal, most likely. But yeah, I mean, that's still a fairly high price. But again, it was on a good street. I didn't have to do a whole lot to it. I could match the debt with the cap rate, lock it in, and I was able to do this. The down payment funds I raised from the cash out refinances that I did on the 3 properties. So let's dive into that real quick. So there was 3 assets that I was able to refinance, 2 triplexes and a 4plex. Those all had just the financing from where I acquired them. I had fixed up the properties, I had stabilized those properties, and then I refinanced them back about the first quarter of 2022 when rates were below 4%. I was able to get 7 and 10-year interest-only debt ranging from 3.5% to 3.875%. And I was able to do max out 65% cash out refinance on the 3 properties totals. I was able to pull out $1,032,000 in cash out, and that's tax-free. So I was able to pull that out. One thing though, my payments go up. So my payments went up a total of $3,314 more per month, or $39,768 per year. That's what my payments went up to get the $1,032,000. I have to pay that. So now I need to make sure that that money that is costing me, what am I going to put it into? Well, I put it into this property, and going back over the numbers, you can see here the net operating income is $104,000. My debt service, this is on the interest only for 3 years, is $61,920, and my net cash flow is $42,110. So that's $42,000 in cash flow, and it's costing me $39,768. So it's costing me, my money's working for me. It's not really working against me. Plus, I was able to do and acquire more units. There's upside to this property, and I'm getting more write-off. I'm able to do a cost seg on this with bonus depreciation and help offset a lot of brokerage income for taxes. And I can still focus on brokerage and put a lot of my time into brokerage. I gave this to a management company, Sullivan Property Management, took over this building for us, is doing a good job. Again, it doesn't need a lot of their extra attention because there's not a lot of turnover, there's not a lot of renovations going on. Everything's in pretty good shape. So this is a way I was able to go, just looking at the 10 units that I have, from 10 units to 18 units, and it's about the same cash flow as I'm making just on the existing property. It's a good way to grow, cash out, tax-free. This is just a deal story on how I was able to do it. You know, if I looked at this and I was like, oh, I only want to get home runs, it's really hard to scale and build a portfolio of buying home runs. This is a game of singles and doubles. Long term, you continue to do that and grow and build. A lot of investors that I've worked with have built their portfolios that way. So I'm just taking a chapter out of their book. But ultimately, this is why I like the deal. This is why I bought it. Got long-term fixed financing, all interest only. I've bought it at a good basis, and it's helping me grow and learn and become a better broker and a better investor, and just sharing the deal story. So we'll continue to do these. We'll see. This strategy is hard to do now because as we shoot this video, interest rates, I'm thinking out loud here, interest rates are like high fives going into 6%. So it's hard to like cash out refi and go buy something right now. I'm sure there's people in certain situations that you could explore to see if it makes sense for you to do that. It's harder though as rates are now higher. But who knows? If rates, some people are thinking rates are going to come back down in the future. At what point, we don't know. But if it does, they might then pick up this strategy later as rates roll. You might be able to do a cash out refinance in the future and do this strategy. But if you'd like to talk more one-on-one about this, I've ran a ton of numbers on it, various different ways, and I've helped a lot of clients grow their portfolio with doing a no sale, keeping the buildings they have, pulling cash out, and acquiring more property. So that's this video. Thanks so much for watching. This is just part of the journey to 100 doors. This puts us a little over 40 units now that I've got. And you know, I'm not in a rush to get to 100 doors. It's just, it is what it is, part of the journey. So thanks so much for watching, and we'll see you on the next one.